One of the best times of the week. Get to sit down and talk to our buddy Zach Abraham, Chief Investment Officer, Bulwark Capital, friend of the show, sponsor of the show. We talk about, politics, a little pop culture, and, of course, what's going on in the financial markets. Man, I'll tell you what. So far, all the fear about all of these things and how everything was going to collapse and all this stuff because of tariffs, that hasn't happened. But I will say this. I think there's still some nerves out there because I still feel like we don't know what's going to actually happen when it comes to tariffs because they're never really fully on.
No, they're not. And quite honestly, it's kind of one of the weird parts of this environment. And we were in our investment meeting yesterday, we were talking about it, and we all agreed, my analysts and other portfolio managers, we all agreed that this is probably the most complicated board we've ever seen. And don't get me wrong, like there's obviously been times where it's a lot, crazier, like going into COVID, right? But COVID, you were dealing with one thing, right? Markets, COVID. When you look around today, you have what appears to be some weakness in the US economy. And then there's some things you could point to that look like strength. There's several things that look like there's some strength globally. Global markets are breaking out, but you have this specter of tariffs hanging like a sword of Damocles over the market. And the thing that everybody needs to remember is that we haven't started paying them yet. Not really, right? Like, so we're getting tariff income here in the US, but it's not to a point where it's really hitting consumer goods yet. If those tariffs don't get pushed out again, they're going to start hitting in the next 2 weeks. So what does that mean? I don't know, because then you have to throw a counterbalance on there, which is, the tariffs will be a net negative for the economy. I don't think anybody would argue that. But yet at the same time, we just passed the big, beautiful bill, which increased the deficit by another $500 billion, right? And that feeds directly into the economy. So, I can't reiterate that enough. When we're looking at the economy today, Chad, we got to look at it differently because, first of all, you just look at the numbers, right? This is, in the modern era, this is the highest deficit we've ever run as a percentage of the economy. So government spending is playing a bigger role in the economy than any time in the rest of our lives. And when that spending keeps going up, we were talking about this the other day. People go, 500 billion deficit increased. Isn't that big of a deal? Let's put it into perspective. Last year, all of the companies in the S&P 500, if you add them all up together, they made $1.9 trillion of profit. Okay, that increase in government spending, that extra 500 billion in deficit spending we're going to do this year, that's the equivalent of about 27% of all the S&P 500 profits last year. So that's a meaningful amount of money, right? So you can sit there and look at things weakening. You can sit there and look at tariffs having a negative impact on things, but you have to consider the offset, which is, and are we a fan of the government spending? No, it's ridiculous. It's out of control, the debt and all that kind of stuff. But the point is GDP likely to go up next year or down? When you look at the government spending, it's kind of hard to make. When you look at government spending and then the reality that we're probably going to cut rates, if the economy weakens next year, it's probably not going to be by much because whatever negative happens is going to be offset by lower rates and another 500 billion in deficit spending. So it's just a bizarre time, man. I'm very crazy.
Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. Let's talk to Fed, because here's something in the politics and the financial world. Trump, of course, who appointed Powell, but then said, I don't know why Biden did that, which, again, was bizarre. The whole thought of, you want that. Look, we can argue whether or not the Fed's good, bad, should we have it. The reality is we got to work with the parameters we have. He's here, and you really don't want him to be independent, is the feeling, and you want him to drop rates. What do you make of the whole thing?
What I make of the whole thing is this is very, very concerning to me. And Chad, you know where I come from, man. I voted for Trump.
Yep.
I'm a Trump supporter. We got to start thinking differently because, first of all, what he's saying, and look, can you justify? So if you look at when he's sitting there saying that rates should be lower and that it's only political that they're not, I don't think he's completely wrong. I think if you look at the economy and you look at what's going on, I think, like, for instance, at the last Fed meeting, the Fed could have easily justified cutting 25 basis points. But here's the problem. You can look at the data, they can easily justify not cutting. When you've got 4.1% unemployment and you've got an economy that's growing at 3 to 4% a year, and everybody said, oh, it was negative GDP in the first quarter. That was purely a trade. GDP wasn't really negative in the first quarter. It was the way it gets calculated, right? It really was. It was an amalgamation. And to add credence to that, we were saying in February that first quarter numbers are going to come in negative, but look past it. It would take me 20 minutes to explain it, but it was a weird thing about trade surpluses, trade deficits. We also knew that to counterbalance that, you're going to see stronger than what should be growth in the second quarter. You're probably going to offset, be right around 3%. When you've got unemployment at 4% and you're growing at 3 to 4%, and you've got inflation at 2.5%, you may think that interest rates need to go lower, and you may be 100% right. The bottom line is, though, there's not a case for it. So what concerns me is not that I think Powell is some great economic savior and that Trump's going to screw everything up by going after Powell. We do not want the president of the United States having the ability to dictate monetary policy. We just don't want. It's not good for anybody. And the precedent that worries me, it's kind of like, you and I have talked about this before. It's kind of like the filibuster, right? Everybody runs up every time you get a new majority in Congress, they run up against something, and you hear everybody talking about the nuclear option. Let's get rid of the filibuster. And even when that was on the Republican side, I'm looking at it going, don't do it, guys. No. Don't do it, right? Because if you do it, when you're not in power, it's going to get used against you in the same way, right? And so I think that Trump's playing a very dangerous game. I think that his critique of Powell, like I said, if the whole case is they were political, like, you can look at the interest rate situation, and like I said, I don't think Trump's completely wrong. And I see there being plenty of evidence to suggest that the Fed is somewhat politically motivated. The flip side is, like I said, if you look at the data, you could also make the argument they're just following the data too. So it's not egregious to me. The whole thing freaks me out. And I will say this, if he goes through, and we have heard from, I probably don't have the kind of connections you've got in terms of inside the political sphere, but we know some folks that aren't too far removed from the inside economic, circles of things over there in DC. And, it looks like he could, and I don't even really know how this works because it's going to set off kind of a firestorm. But the word on the street is he's going to fire Powell in the next week. And if he does that, there's going to be chaos. You're going to see the dollar plummet. You're going to see the long end of the yield curve come untethered. You're going to see the 30-year go higher than 5%. It's going to be ugly. And I'll just tell you this: if he fires Powell, we have a whole playbook in place right now. If he fires Powell, we are going hard short against interest rates. We are going to be buying volatility, and it's going to get nuts.
It could get nuts. And you like somebody like Scott Benson is going, no, this is not what you do. First of all, he's only here till May of next year. He's probably going to drop. What do you think? By the end of this year, a half a point probably by the end of the year? So if you just look at the data, I don't think they can justify more than 50 basis points of cuts before the end of the year. Not unless something else happens. And the reason I say that is not just, look, if we hadn't had a bout of inflation, if inflation hadn't hit 9% at some point in the last 3 years, you wouldn't be nearly as concerned about it. But when you understand the history of inflation, it's like a grease fire, right? Like, you think you've got it out and it jumps back up again. And so
if you are, and again, I voted for Trump twice. Okay, so I am not anti-Trump by any stretch of the imagination. But one of the things we always talk about is you have to keep your politics separate from your investing. So I'm looking at through that lens, right?
Yeah.
Trump's talking about rates should be cut by 150 basis points. There's just, look, something bad could happen in the next 6 months and he could be proven right. Okay, but that's not how you make monetary policy. You have to be looking at current conditions. There's just no case for lowering rates that much. There's just not.
No. Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. As we're into the second part of the year, it's going to be an interesting year, especially because, like we talked about, the tariffs, all of that stuff. I'm interested to see what that third quarter, into the fourth quarter, starts to look up as we get towards the holidays, because you're already starting to see a Halloween thing here, a Christmas thing there. What's the hiring going to be like? But on top of that, the buying right now, people. You're not feeling it at the store. We're not seeing that. But I told everybody, toys are going up. If this was happening now because of the toys and they get way more expensive, people are going to start to feel that. And you don't really understand tariffs in this stuff until you pay with your money. Because when you drive by a gas station and it's $6, you see that every day. You don't see that with eggs or coffee or inside your basket.
Right. Right. Well, and then look at copper, right? I mean, you've got a 50% tariff on copper right now. Like I said, the tariff, and listen, I'm not anti-tariff either, right? Our take on this whole thing has been, and this is kind of one of the things that irritates me about this subject. People are like, oh, tariffs are bad. And you look at them and you go, yeah, everybody knows that. Okay. That's not the point. The point is, do tariffs get us to better trade deals with everybody else? And my point all along is, look, Trump is playing a dangerous game with the tariffs, and he's a risk taker, and that shouldn't surprise any of us. We are not going to know whether the tariff strategy works until we see the trade deals. Bottom line. So if the trade deals are better and they're improved, you've got to look at the tariff situation. You got to be like, hey, that was a win, right? If they don't, and tariffs stay, like if the next 2 weeks hit and all the tariffs that have currently been put in place stand, and if we start paying those prices, it's really hard to see a scenario where you're not in recession within 6 months.
At some point, don't you think, though, he's got to stick to the I put these tariffs out there. He's kicked the can. I mean, he's got the taco, right? Trump always chickens out. At some point, you've got to be willing to call everybody else's bluff.
Yeah, that's the tough part about this game that he's playing. Yeah, you do. Now, I would say this is that I think the other thing that's sort of amusing is you get all the people wringing their hands. Oh, they're not going to, and you're like, guys, no economy in the world can afford not to have access to the U.S. consumer.
Absolutely.
Okay, so the one thing, the thing I do like about what Trump's doing with this is when you have leverage, you need to be responsible, but you also need to use it. Yeah. Right? The idea that we were coming up on the short end of these trade deals with so many of these countries is ridiculous. Right? Like we're just wounding ourselves for the sake of it. So I like that. But to your point, if you look at a country like Japan, it's getting kind of interesting because from everything I can see, Japan hasn't even moved yet.
No.
Right? Their attitude's like, well, whatever, hit us with it. And then that kind of puts you in an awkward situation because what if they look at you and say, okay, so what? Well, fine. What do you do then? I don't know. Like it's a risky gambit. It's one that I hope works and pays off. It's one that I'm not completely opposed to. I think if I was in his shoes, I would have used tariffs as leverage. I think I would have rolled it out differently. That being said, I'm not worth $5 billion and don't have a real estate empire like his either. So,
or a crypto empire, because that's his big jam, the crypto, which apparently now you're going to be able to throw into your 401k and stuff, along with all the other God only knows. What is that about, man?
Well, see, Trump has Trump's unorthodox, and he's done some things that I wouldn't do. And yet I think he's done so many great things. And so my attitude has always been like, hey, there's a method to the madness, give it time, all that kind of stuff. I'm really struggling with this one, man. That executive order that he just announced the other day to put private equity assets into 401ks. And here's the reason why. Any reason you hear from anybody, okay, and put this in perspective, this is something Larry Fink, the head of BlackRock, has been pushing for over a year and a half. The reason that all these guys are pushing, now just ask yourself a question, right? Private equity for forever and a day has been for accredited investors only.
Yep.
Now, all of a sudden, we want to open up for everybody. I think it's really, really interesting that when we want to democratize private equity, right? Let's start from a baseline. You know this. Anytime Wall Street tells you they're doing you a solid, you better look over your shoulder, okay? And this private equity deal is exactly that. The average private equity book, the average private equity firm right now is between 40 to 60% underwater, and you're not seeing it on their books. And the reason you're not seeing it on their books is it's private equity. They don't market to market every single day like the stock market. So the only time they change the prices. So let's say you and I own a private equity firm. We've got a private equity company. We own company ABC, right? And they're a tech company, and we're really excited about their future, right? And the last funding we did, we raised $250 million for company ABC, and that $250 million was based on them being valued at $3 billion. Okay. So we're carrying their investment on our books valued at $3 billion. Okay. The problem is with private equity, first of all, when interest rates go up, you need to mark those down, right? Higher interest rates are, the less the company's worth. A bunch of these companies haven't fared well after COVID. But here's the thing. None of them have done any money raises, and they haven't done it on purpose. They've been using debt to finance themselves so they don't have to do what we call a down round. They don't have to raise money at lower than their previous raise. And the reason they're doing that is because they don't want to admit they're down. They don't want to take the loss. Okay. So the problem is that the other problem is there's been more money pumped into private equity over the last 10 years than any other time in history. It has boomed like no other segment of the market. So all of these private equity companies that would typically sell the investments to each other and swap them, none of them can take anything on. So they have nobody to sell it to, right? So what do? Well, you create ETFs, you get rid of the accredited investor thing, you pile all this garbage into an ETF, just like they did with mortgages, right? In 08, 09, those collateralized debt obligations, let's put all the garbage together in the same package. And if we stack dog crap high enough, it's no longer dog crap. That's what they're going to do in these ETFs in the private equity, and then they're going to dump them on the 401k plans. And these are private companies. So you can't even go out and get public disclosures. You can't look at the financials. You can't look at the books. This is a bag holding, dump it on John Q. Public. It's disgusting. And he issued that executive order, and I was shocked. I couldn't believe he did it. It is grift. This is what Larry Fink wants done at BlackRock. And guys, I'm not bagging on Trump, man. I said I voted for him twice. I have never been more disappointed with him than I was when I saw that executive order, because there is no there. Like, I was doing another interview and they go, hey, so you're against him opening up act? No, I think the accredited investor rules are garbage, and I think everybody should have access to that stuff, but not right now. Make them take the hit. Don't sit there and bail these suckers out with private 401k fund.
Yeah. It's one thing if you're sitting around, you got some cash. It's another thing when you're looking at people's retirements and these people go and schlep this onto those people. You guys take the loss. We take the win. Hey, we win again. Sucks for you. Good luck, though. Now you've got some now you get to say you own a company at the beginning.
Yeah, and Chad, and we've seen this for too long, man. And that is that this corrupt perverse version of capitalism that isn't really that's the other thing that ticks me off, right? When this stuff blows up, everybody goes capitalism screwed up, and you go, this ain't capitalism, man. This is some bizarre twisted version of crony capitalism, which is we privatize profits but we socialize losses.
Yep.
Right? And I've had enough of it. And that's all this is. And when you've got an issue, like to put it in perspective, right? Harvard, right? Their big endowment, $62 billion endowment, it's 50% private equity. And they're choking on it because it's not worth anything what they paid, but it's not liquid either, right? And so we're literally stepping in there. And if you're going, okay, how do we bail out private equity? There aren't many pools that are big enough to take that on. But then we take back and look at the 401k system, $12 trillion of assets. Oh, there's a big enough pool of capital to take these losses for us. And that's what they're doing.
It's going to suck. It's going to suck. Love talking to you, brother. Zach Abraham, Chief Investment Officer, Bulwark Capital. People want to reach out to you. They want to join. Next week, you got your big webinar. What do they do?
Yeah, go to bulwarkcapitalmanagement.com. You can sign up for free. It doesn't obligate you. We're not going to call you. This is a way for us to tell you who we are, what we do, and how we do it. If it makes sense and you want to talk to me or one of our advisors afterwards, we'll set that up. If not, hopefully you leave more educated. So just go to bulwarkcapitalmanagement.com, sign up, and hopefully we'll see you there.
Right on, brother. Good talking to you. Hit him straight.
Hey, you too, pal. Have a good one.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.